Yeah. Is my screen still shared? Kindly
Yes, it
confirm.
is. Yeah.
Good. Okay, I was explaining what technical analysis means. Technical analysis means a set of tools that are used to predict what the price formation of a particular financial asset will be in the future based on what happened in the past. In breaking it down further, it's like we observe that, okay, 15 minutes ago, the bull, the bull is taking over the market to a particular extent based on the candlestick. Candlestick is one of those tools. Now, when I say tools, we have many tools. We have candlestick, we have EMA, exponential moving average. We have RSI, that relative strength index. We have MACD, and we also have candlestick. We have another. We have histogram and and others as we go on. So these are the tools that I employ in technical analysis. Now, if for instance we observe in a 15 minutes chart, we observe that, okay, the bull is gradually taking over. Now, based on that observation, maybe a candlestick, since it is bull, based on that candlestick observation, we could actually predict, okay, if the price is going to rise higher or if it come down. Now, the tools that help you to predict the price based on um based on, let me admit Henry, who is supposed to take this course. Yeah, so the tools that the set of tools that help us to that help us to predict the price or what with the market, the price formation for the next phase of the market, for the next 15 minutes of the market. These tools are called technical analysis. And the knowledge of these two, you can combine one or two of those tools. For instance, you can combine candlestick, exponential moving average, can combine MACD, can combine histogram, you can combine EMA, combine them together, two or three, to determine, okay, what will form in the next minutes or in the next hour based on the trading, the time range you are trading with. And you can also use you can use candlestick, to actually analyze the market and make decisions to buy, to enter a trade and to close a trade. Now, so that is just the introductory explanation. Now, the candlestick formation. Okay, now look at these candlesticks. These candles, okay, let me explain candlestick. Okay, look at this this chart. Look at this chart. Look at this chart. When you look at this chart, you discover that we have on this place we have BNB is pairing with USDT. USDT is a stable coin. It's a coin that is equivalent to dollar. It's stable because it does not fluctuate like the way Bitcoin, BNB, and other coins fluctuate. When we say stable coin, it means coins that do not fluctuate, coins that help you to preserve the value of your crypto asset. When you make profit, you can hedge it there and it will not fluctuate. Okay, we already know that. So we are seeing the price going up, changing. Now, when you look at the second lines, you are seeing candles. Yeah, we are seeing green and red candles. Okay, when you look down, okay, you are seeing lines. Still lines, red lines. These, they have different meaning. But what we concern us today is these candles, these candle-like symbols. Do you understand what I mean by candle? Like this green and red boxes or square, they have still different shapes, but that is what is called a candlestick. Good. Now, candlestick actually um are have some things, have some features, so which I will quickly highlight those features. And one of the features of candlestick is that candlestick is actually represents time frame. time frame feature. Now, a candlestick, if we have one candlestick, for instance, now this last candlestick that is forming is when you look at my this thing, the hours. I mean the time frame. We have 15 minutes, we have 1 hour, we have 4 minutes, we have one day. Let's say one day. Look at one day. Okay, but take 15 minutes. Look, let's take 15 minutes for the purpose of this course. Now, when you look at this last candle, candle that is forming, this last one, what it means is that it is forming. It is whatever the market is doing, all the price formation for within 15 minutes that is forming on that candle. So one candle actually represents 15 minutes 15 minutes price formation. Okay, that is one of the feature. Now the second feature is that a candlestick tells a story, the story feature. Now one candlestick actually tells what happened in the market. It actually shows if the bear, that is where the bear and the bull analogy comes to play. Bear and bull. We used to hear bear and bull, uptrend, downtrend, always. But bear and bull. Okay, let me explain bear. A bear market is when the price of the market is going down. And look at this. Bear does not necessarily mean the candlestick must be red or it must be green. Yeah, a green candle stick could be bear and it could be bull. So what a bear market means is that the price is going down. The candlestick is showing that the price is going down, and a bull market is showing that the price of the candlestick is showing that the price of that particular asset or particular coin is going up. Now I'll be explaining what they mean as I proceed in the discussion in the teaching. Okay, now how do they tell story? How do candlestick tell story? Candlestick tell the story of how the market is moving, how the bear is trying to overpower the bull, or how the bull is trying to overpower the bear. We call it bearish divergence or bullish divergence. Now, hello. Okay, so let me take one of these candlestick and analyze it. Okay. Let's take this candlestick. Can I draw a line? Okay. Trend line. Now let's take this candlestick. Okay, now let's this candlestick. Yeah, this candlestick, this green candlestick, this green one. Okay, from this green one. Now when you look at that candlestick, is everyone seeing the candlestick?
Yes.
Okay, good.
Yes.
When you look at that candlestick, the candlestick, a candlestick has a body and a wick. This is just like normal candle. Normal candle, when you have a candle, it has a wick. Now the wick is the thread, and the body is the body is just like the wax. Okay, now this candlestick, it has a starting point where the candle open and where it close. It has the starting and it has the ending. Now, for a green candle, this where this the was where the was starts, where the was end, like this place. Let me use this. Okay. Now this bottom. Okay, this bottom, the bottom of the was. The bottom of the wash. Okay, good. Now the bottom of the wash. The bottom of the wash where I'm touching so is called the start. It's called the start. Yeah, it's called start. Hello, Henry. Am I in order? Hello, Henry. Is Henry there? Okay, now that is the start. Then the end of that wash is called a close. That means the end of this wash. That is the end of the candle. Good. It's called close. So that is open, start, and okay. I mean open. This beginning is called open. This place is called close. Open, close. I mean open, close. The beginning of the wash is called open for this green candle. Why the end of the wash is called close. Open, close. Now look at the wick. When you look at the wick, the bottom of the wick, this same candle, that bottom is called low. That bottom is called low, and the height of the wick, the height of the wick is called high. Low, high, open, close. Hollow, high, open, close. Low, high, open, close. Now, and this body is actually what happened between that 15 minutes. Okay, as the bear is trying to push it. The bear always trying to push the market down, and the bull trying to push the market up. When you say bull, it means up, up. Bull means up, pushing the market up, pushing the price up, pushing the price up. Bear means down. Bear means down, putting the market, putting the price of the market or the asset down, putting it down, deepening it. So yeah, so and now when this candle that I'm explaining. Oh, now okay, let me now go to the red. The red one that is close by. Um, the beginning of that was, in this case is called close. It's close. The beginning of the was is close. Why the end of the was is open? It's the opposite of a green candle. The red is the opposite of a green candle. And why the beginning of the week, the thread, the thread line, we have low.
My scooter and your scoot and your skateboard are in the boot. Can I have my skateboard and then your scooter back?
Okay.
Thank you. Can I have some water? Yeah, can I also have some water, Dad?
Hello, there's noise on the background. It's Vicky. Now, yeah. So the beginning of that week is low, and now when you look at the end of that same candlestick, now when you look at the top, that the tip, the wick at the tip and the body mix together. So this becomes this become the close at the same time. It becomes low, it becomes a high at the same time. That the close and the high is the same in that particular candlestick. So what I'm trying to explain is that the close and the high can be the same thing, and the low, you can have a candlestick that just the body will not have a wick. So if it is green, it means the bottom is low and the top is high. Then if it is red, the opposite is the case. Good. Now let's apply what I'm trying to explain. Let's apply it to how you know how it actually how a candlestick actually tell a story. Good. Now looking at these three green candle, the three green candle. Look at this three green candle. The three green candle. That is the three green candle that formed consecutively. In series. That is one. Okay, let me draw another line. Okay, look at where the dot is. Those 1, 2, 3 candles. 1, 2, 3. Okay, I think 4. 1, 3, 4 candle. Those green candles. Okay, now when you look at those 4 candles, now you discover that the first green candle is actually it has a small body or a small wax, but it has wick at the tip. It has wick at the bottom. So we'll say okay, it has open and close in the body. Open and close. Open is the down of the body. Close is the end of the body. Then low is the beginning of the week, and high is the end of the week. Now, what does this mean? What does this candle mean? This candle means indecision in the market. When a candle is not actually, it does not actually go. When you look at it very well, it does not actually go up. Does not comes down. So that means the bull is neither taking overpowering the bear, nor the bear overpowering the bull. Now, in this case, the market is the traders are indecisive. So that means they're indifferent. Should they trade? Should they not trade? They can't determine them because the market is not clear what the next formation is going to look like. So we call that an indecisive or candlestick. Good. Now, but when you look at it very well, very critically, when you look at it very critically, you discover that this candle is actually showing a sign of an upward trend, which later resulted to the increase in the next candle. When you look at it very well, the week the week below is longer than the week above. What does it mean? It's not actually at the center. What does it mean? It means the bull is trying to push the market or push the price up. Now, when you see this kind of sign, but in some cases it's bigger than this. It's bigger than this. When the price is going up, then and the market now close. Now you discover that you now know that the next candle it is going to continue from where the price closed, and it's always so. The next candle always starts from where the green candle closed. Look at it. When you look at it very well, when you look at it critically, so when you look at it critically, look at it. The next candle form where where the previous candle closed, open where the previous candle closed. Look at this. Look at all. Look at all. Look at all. Then when it comes to the red, the opposite is the case. It's reversed. Like it's an inversion. It's reversed. Look at this. Okay, let me delete this and come to this trend line. Okay, look at this. Look at that. The red candles. Look when you look at it very well. Okay, now you discover that the red candle, as it's coming down, where it's close is where the next one form. Where the next one open is where the next one the subsequent ones, it will be forming with that pattern. Okay, now back to what I'm trying to explain. Now looking at this candle is actually showing that okay, the bull is overpowering the bear. That there's a bull run. There's a sign that the price of the market is increasing because there's a bull. The bull is overpowering the bear because the candle that formed actually is pushing the price up because the candle above, I mean the wick above is shorter than the wick below, and that body of the candle is not actually in the center, actually